There's a big difference between the economic outlook and what the markets are actually doing. And, a lot of our clients are asking us, why is the market up now? And why are you seeing, a lot of the major high beta indices rallying? And, I think that one of the big reasons why we're seeing this is that fiscal and monetary policy have been just so robust, and the Fed support has really been epic. We're expecting Fed Chair Jerome Powell to speak today. Probably won't see any action in interest rates, but what we probably will see is some rhetoric or further conversation or reassuring messages to investors that we've been seeing all along, that the current financial crisis is under control, that we have the support of the Fed. So, this feels a lot different than 2008. So, the economy feels like it probably is in trouble. A lot of these companies are pulling back on earnings. We need to get people back to work at some point, of course, when it's appropriate to do so. But until then, the world is sort of slowed down. And the difference, though, with the markets and why they're rallying is that we're on track to have $8 trillion balance sheets with the Fed. The Fed put is very much in play. Yep. Fiscal monetary policy are having a big impact, and they're reacting very, very fast, a lot quicker than they did in 2008. So I think that, investing along with the Fed is usually never a bad idea, and the markets tend to react to that, and that's what we're seeing here.
Is that really, Sylvia? I mean, is it that simple? We always say, don't fight the Fed, the old adage, but in this case, don't fight 5, 7, 8, $10 trillion balance sheets.
Yeah, it's certainly been working in the market in the near term, and I think that the other sort of overhang to this is that you're just talking about it before. A lot of people seem to be adjusting to this. People are going back out to the grocery stores with masks and gloves. We're starting to see companies like Starbucks, for example, reopen in China, factories open there, which, impact the supply chains for some of the market darlings like Apple, for example. Retail and tech have played a bigger role right now for investors, and you're seeing some stocks move there. So, there are opportunities in the market because of the stimulus and also, some of the thoughts that the curve might be flattening on the virus.
And as we round out here on the show, Sylvia, where are your clients putting their money right now? Are they betting big on equity markets? Are they taking leveraged bets?
So we're seeing a little bit of all of it. For the long term, we're seeing clients looking for quality. So they're looking for high quality over low quality. In the short term, 3X trades. We've seen a ton of flow into tech and semiconductors. Tech is enabling us to work from home right now. It's almost behaving like a defensive stock now because, whether or not earnings are down, you will have potential earnings recovery into, years to come because of the reliance on things like video streaming, webcasts, Zoom, faster speeds, memory chips, all this stuff that we need to work from home.